the amount of things that will be on a blockchain 10 years from now is going to blow people's mind. Simple things that are the examples that come to mind will probably take the longest, oddly enough, is like a car title, a house deed, the stuff that government runs the registries of.
Right.
That's happening.
Welcome to a Wiser Retirement Podcast. Are you curious about how to build your own crypto portfolio? I'm Casey Smith. Today, I'm joined with Robert Shorthout, founder, CEO, portfolio manager of Teton Crypto Capital. Each week, we bring you practical advice on retirement investing and planning for your financial future. Don't forget to subscribe to the podcast wherever you're listening. Hey, Robert.
Good morning.
So Robert and I think everyone's figured out by now, we're pretty good friends.
Yeah.
And I wanted to say congratulations, friend, on a big achievement. Robert has his own private pilot's license now.
Yeah, that was it was supposed to be a month ago, and then it got bumped. And those listening that have done this will understand. But yes, the check ride got bumped, and then finally got it done last week. So it was. I slept very good that night afterwards.
Oh, I'm sure.
Yeah, but it was fun. So
check rides are always. You never quite know exactly what's going to happen, especially the first time you do it.
Right.
The examiner could be in a horrible mood. You just in your case, the examiner was really busy with a busy check ride prior, so I think you got off easy because she was kind of like, I'm ready to go home.
Yeah, I was kind of coached that it may be an hour and a half for the oral, or an hour and a half for the flight portion.
Yeah,
and it was 45 minutes and then 50 minutes. So it was like
awesome.
I almost. I knew that I didn't fail because she said I didn't fail, but it felt like I was failing because it was happening so quickly.
Right.
But yes, it was a fun ride home, not having to, I guess get to breathe a little bit. So
yeah. For those who haven't done this before, when you go in for the oral exam portion, it's not like it's a pass fail, but no one's grading. It's not like you're doing a test and they grade you. It comes to the art of doing it because it's really how they perceive you're answering the question. So if you answered every question right, but you were hesitant on each question, they'd probably still fail you.
Yeah.
So you have to kind of play the game a little
bit. I felt like I was in the oral portion, I was answering questions pretty well up front. And then she asked me stuff around the pedostatic system and if stuff was partially failed. And I was like, I did not study this portion of it and never was guided that I needed to know this kind of thing.
Right.
And then later I learned that she was trying to figure out where the edge of my knowledge was. So she found it. She felt like she was happy with that. And we got to go out and fly. So
that's cool. Well, congratulations. So where are you headed now?
I am on my week and a half. I'm taking 2-ish weeks off and then I'm headed into instrument training. So
yeah, instruments, we don't want to be a JFK Jr. So yeah, instrument training is very important. Although your airplane could probably save you, but
well, I don't have a plane. I just rent.
So. Well, yeah, true. But the airplane you fly has a lot of technology that would prevent you from being a JFK, but
hopefully you still can be dumb.
You still want to be, you still want to have an instrument rating.
Yeah.
For sure. You never know what situation you're going to end up in, but anyway, that's a big deal, man. Congratulations.
Well, thank you.
All right, so let's get started. We're going to kind of go through some crypto news first, and then we'll start in our main topic. So, Robert, I'll let you live in this world every single day. I'll let you kind of tell us what we need to know about crypto news over the last month.
Yeah. So in the previous episode, we talked about Ripple buying Hidden Road for $1.25 billion. In this episode, we're going to talk about Coinbase buying Deribit. I would imagine maybe nobody listening to this podcast has heard about Deribit, or maybe one person, but Deribit is a options platform that focuses specifically on options for crypto. Coinbase bought them for $2.9 billion. So roughly twice or just over twice as much as Ripple bought Hidden Road for. I was thinking of a way to kind of the moment that crypto should celebrate. Obviously, these M&A deals are getting bigger and they're happening rather quickly in these first 3 or 4 months of 2025. I will be excited when crypto M&A deals, the headline number is bigger than the bankruptcy numbers we were talking about 3 years ago. So then I feel like we have made it to that point. We have that threshold that we need to get over to really celebrate these, in my opinion. But it's so that number would be 10 billion for those keeping track at home, because that FTX was quite the big meltdown 3 years ago.
I can't believe people do options on crypto.
Oh my
That
gosh.
makes my brain explode.
There's options that you can do on leverage in crypto. So you could add fuel to the fire. There's even 100x leverage in some exchanges. It is
Wow.
insane. I mean, the liquidation that would happen if it goes the wrong direction on you is pretty crazy.
Yeah.
Very quickly.
Right.
So yeah, so that headline is there. The next headline is also a potential M&A deal, but Circle, the issuer of USDC, the stablecoin, the biggest stablecoin that is based in the U.S., is the company Circle is an IPO process. I want to say they would hope to go public this fall. They're doing the roadshow, but they have been receiving offers, one from Ripple and one from Coinbase, to try to buy them out before they go public. Circle was hoping to go public at roughly a $5 billion valuation. I know that Ripple, their last offer was $6 billion. They were saying, we'll just take you now. And Circle said, no thanks to that. Obviously, they're going to try to negotiate. What the little wrinkle here is 3/4 of Circle's revenue is derived by volume of USDC that goes to Coinbase, and Coinbase gets that revenue. So with high rates like they are now, relatively speaking, Circle is a decently profitable business. If the rates go lower, I would imagine those margins get compressed very quickly. And the business doesn't look as pretty, right? So it would be interesting to see who wins this battle. I don't know if my stomach is right here, but my gut tells me that Ripple wins this one because they need to be in the stablecoin business, in their opinion.
Yeah.
And they've launched their own coin, but I'd imagine they would wind that down and keep USDC since it has so much broader market capitalization at this point. But yeah, so we'll see. I imagine within the next month we may have an update on this one. So on the topic of stablecoins, kind of a bit of a thread here. Meta, so Facebook, if for those that remember, in the summer of 2019, they had announced they were launching their own stablecoin called Diem. Diem was going to be a basket of US dollars, the euro, and I believe the Japanese yen. And lawmakers, everyone lost it. They're like, nope, this is, on the heels of Facebook coming out of their Cambridge Analytical scandal where they were basically had no trust. And now you're like, oh, you want to run everyone's money for 2 billion, 3 billion people. So that got wound down. That project and that team actually became a different cryptocurrency. We're not going to talk about that today, but Facebook is back saying that they want to launch the ability to do payments in a wallet built into your Facebook account, but with existing stable coins. And at first I was like, oh, that's weird. You would think they would take another stab at it. And then I realized
PTSD.
Yeah, exactly. When I started digging into it, I realized that the updated bill that's going through the Senate and House, there's updated text in it saying the big tech players cannot issue their own stablecoin because they're worried about too much control over the financial side and the technology side by the same companies. So the companies are literally called out: Meta, Amazon, and Google in this bill. Like I don't know if that happens often in bills where you call companies out saying they can't do something, but here we are.
So they just change your name.
Well, I mean, they go back to Facebook and they're fine, right? I don't think it will be that simple.
How many stable coins do we need? You think about stablecoin, you think maybe 1 or 2 is probably all you need in the whole world, right?
Yeah, you would think. So part of it is like there's a stable coin, but a stable coin can be on one or many different crypto networks. So depending on the network it's on, you may need other ones because they don't want to service that network. There's a bit of politics that go on. But you start to wonder, how do you bridge these things? It raises other questions that some crypto networks try to solve in themselves. But
what if the U.S. government just created their own stablecoin?
That would be more of a CBDC. We haven't been talking about that these days because I think the politics around it and privacy, at least in the U.S., I mean, with this Trump administration, not going to happen.
Yeah.
There'll likely be a euro.
Because you're concerned that if the government does that, every digital transaction they can see into everything.
They see receipt data effectively at that point. Right now, the Fed and the U.S. government doesn't outside it without a subpoena because it's going through a Visa debit card or Visa credit card, or the banks see that data, but that there's a layer, I guess, of protection of sorts.
And maybe if you give to the government or give to politicians, it has to be done through a coin like that. That way we know exactly where money's coming from.
Well, so there's pluses and minuses, right? I mean, there's the privacy side, and then there's also the efficiency side.
Right.
I think that the opponents of a CBDC would say it would just turn into what China has, and China's super surveillance on theirs, and I
Right.
respect that. Um, but I also can see, every time I go to buy something and they're like, "Oh, if you pay with cash, you get a discount." I'm like, I know that person's not paying their taxes. Like, and as someone that pays their taxes, it's a little frustrating. Yes, I would like a discount, but like, anyways, it's a bit of a soapbox topics for me.
Going back to airplanes, there's a guy out at our airport, mechanic, and he's told everyone, I don't use them, but he's told everyone he will only accept cash going forward because the government doesn't need to know what he's doing.
Yeah.
And I'm like, it's because you don't want to pay your taxes. Let's just say
So,
it.
you're right. Well, that, and also, like, I imagine they people with that mentality probably don't have optimum like technology like etiquette. So they're probably leaking data elsewhere that probably tells a story
No,
anyways.
he wouldn't even take a check. He wants people to bring like cold hard cash. Like, first of all, it's not cheap to work on an airplane. So every time someone touches it, it's gonna be like $1,200, right?
Right.
So who's walking around with $200 cash?
Right. I think at the end of the day, we're in the experimentation stage largely. I mean, there's the market cap of all stable coins is, I don't know, $150 billion or less. That's a lot of money, but not really in the grand financial scheme.
Right.
I think there'll be a settling down over the next couple of years. It'll get all figured out. Also, as part of this bill, it's not made in our notes here. This bill would bring Tether, so USDT, under U.S. jurisdiction, even though it is based in Argentina now. I think they've moved from the Caymans to Argentina. It's interesting they kind of just did that. I mean, they could block them out of the market, which would really hurt them. So then you would have a rest of the world stablecoin that's based in dollars,
right,
and the U.S. The part that we don't typically talk about in stablecoins is when it comes to a dollar-based stablecoin, that's actually a good thing for the U.S. because those are buyers of treasuries, and obviously billions of dollars. I mean, like, it's getting to be something that like the Fed probably pays attention to.
Right.
Versus, traditional type of assets. So anyways, I think that we will stop there with stablecoins for today. And we'll say one last thing. So Paul Atkins, he's the new, he got voted in by the Senate and confirmed. He's the chair of the SEC. Wind back 4 years ago, I was excited when Gensler was coming because he had taught crypto at MIT. It could not have gone any worse, in my opinion.
Right.
So I've been hesitant to be excited about Paul, even though I hear great things about him. But in his first speech, he literally came out and said that the SEC needed to create clear guidelines for crypto issuance and explore idea of a safe harbor. And I was like, that sentence alone, I was like, okay, different administration here.
Right.
The safe harbor idea is when a crypto first launches, if by definition of what we currently have in the law now, it is a security. There's no doubt about it because it's not decentralized and all the natures that it can morph into.
Mm-hmm.
So Hester Peirce, another commissioner of the SEC, has this proposal that would allow a crypto network 2 years and have to hit milestones to become effectively decentralized. And then it would kind of get to be able to go a commodity at that point. It wouldn't have to necessarily do all the registrations that you would do with a normal security.
Right.
So it was great to see him say that. Well, he had said that as part of his Senate hearing, and to see him say that after he's been voted in, doesn't do it. The rubber's got to hit the road at some point, and they'll need to follow through. But the SEC currently is walking that walk, which is great to hear. So we will hopefully have more good news there, and kind of maybe start to forget about the past a little bit and move forward with some good guidelines.
Before we get back into the episode, have you ever wondered why annuities keep coming up as a recommended investment? While they're often pitched as a way to reduce risk and secure your future, annuities frequently benefit the salesperson more than the investor. Download our free guide, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity, at wiserinvestor.com/guides. Now let's get back to the episode.
What do you see as far as regulation goes? Any
So
headway on that?
Yeah. So obviously we've talked a little bit about the stablecoin bill in this podcast already. that is more of like a very basic Lego block. It's got to, if stable coins can get figured out, the regulations around that, because like how they can be backed, can they currently be yield providing, which is no by this
Right.
bill, which is only good for the issuers because then they get to keep all the yield.
Right.
But at the end of the day, I think that will get done. It sounds like it may even get voted through the Senate before Memorial Day. Trump wants this bill on his desk by the August recess, he said. Once it gets to the Senate, it's clear sailing. The House is all on board, and definitely has the votes. So that's good news. They have a bill coming through they call the market structure bill, which is more broadly, it may get into this whole like safe harbor thing. It's much more nuanced. Do we get that this year? I would be thrilled if we did. I'm kind of setting my expectations early next year just to kind of not be in a situation to be disappointed. But that's will be interesting to see how the market reacts to that, because I think there'll be a lot of anticipation leading up to it that like it may already get baked in the prices. So I wouldn't expect like a huge pop because of that bill passing, but like
Right.
it definitely puts a stamp of approval on the industry that makes it harder for regulators to try to ring into the oblivion. So, but yeah, it's all these things lead up to should you invest in crypto? Like, how do you think about investing in crypto? So I think we're going to talk a little bit about that.
When you build a portfolio, let's just say of ETFs, we use most advisors use the modern portfolio theory, and basically each asset class has its own standard deviation or own risk.
Mm-hmm.
So you think large caps would be, as far as equities, would be the most conservative. So that'd be like the S&P 500, and then you'd have S&P 600 or 400 for mid and small caps, which are a little bit more volatile, but supposed to have a higher rate of return. Hasn't recently, but then you have international, which is going to be similar to your S&P 500, except you have the currency risk because of the foreign assets in there.
Mm-hmm.
And so, and then you add bonds, and of course, bonds could be a whole podcast on its own. Let's just say they're more conservative than stocks,
right?
But bond market can be more aggressive than stocks if you're in the wrong one.
So, yep, absolutely.
So you let's just assume short-term U.S. Treasuries for bonds, and how you build a portfolio is if you want the highest rate of return, you drop the bonds down to almost zero, and then you have mostly large cap and mid cap, and you might have a sector or something like technology that kind of try to juice up returns or a growth tilt in the portfolio. So my question to you is this how you think when you're building portfolios for your clients? Is this how you think about investing, or is crypto just totally different?
Well, I'll say up front, not a financial advisor, so none of this is advice in that sense. I don't build portfolios that care anything but crypto, right? For me, it's like I'm isolated, and if somebody decides to invest in the fund, that is the advice that they've either chosen for themselves or their financial advisors given them.
Correct. So if I had a client and they said, hey, I want to take some outsized risk, your fund would be a choice because it's the ability to get large returns over time. Right. In theory.
Yeah.
But it's also very volatile. So on my chart, I go, well, hey, we could put, 5% over here in this fund. And I know that's going to be volatile, but if it goes to where we think it does in 10 years, then you have a much bigger return.
Absolutely.
So I guess my question is, when you're looking at, because most people only know Bitcoin.
Right.
So do you categorize things in like, okay, Bitcoin's kind of like your S&P, and then Ethereum's like your Nasdaq, and then your,
so my fund is even more niche than that. So it doesn't hold Bitcoin or Ethereum. So I don't even really have to, I guess, answer that question per se.
Right.
We've built the theory and the thesis around all about commercial utility, like, and how things are going to be solved long-term for business problems. Because I think businesses are the first major adopter of crypto, even before like consumers. I think certainly consumers gamble on crypto now. They don't do anything else with it. Maybe they buy coffee because they think it's cool, but it's not really being used anywhere else. Even in gaming. Gaming is an industry that could be obviously consumer focused, that has all the things you can buy and sell in it. Over time, those economies, I do think they come on chain, but even they're not ready for, they haven't fully adopted or even partially adopted crypto at that point. So my thesis, and just generally, I'm a long-term thinker when it comes to investing. I don't necessarily care about where the market's at today, where it's at tomorrow. It's all about where I think it's going in 5 or 10 years, or 3 to 5 to 10 years. So use that kind of, set of binoculars there. And there's no joke. We used to say the number of cryptos that were in existence early on in the podcast. It was like 20,000 was the number we used to say. It is like close to 35 million at this point.
35 million cryptos?
Yes, with an M. Yes. Because
so you want to build your own crypto portfolio of 35 million choices.
Yes.
Awesome.
And 99.999% of those are absolute trash, right? There's like, it takes all of 5 minutes to make a token. And then if you can market it, then great. But it's still at that point, what's the value in it, right? Like it's more of like a Beanie Baby at that point.
Right.
You have to find people that care about it. So
like you have the Trump token that's launched.
It
has no purpose.
In my opinion, it is part of the meme coin bucket.
Yeah.
The Trump family is not going to say that, because they're going to say it's useful because you can buy his different things that he's selling. You can buy the Trump watch with his meme coin. They're going to say there's utility there, and that's, you know what?
Yeah.
There's marginal utility there,
but not really.
But like, why would you take your dollars to buy the Trump meme coin to go buy the thing you can buy dollars with right now? There's no, at least in the US, there's no utility there. There's no value. They're not like giving you a discount as far as I'm aware.
Right.
So I don't know. There's all these funky little things you'll find with a crypto.
So is it the same as Doge? You think about Dogecoin? Does it have, I mean, Elon, could you buy a Tesla temporarily with Doge?
He joked about that. I don't think there was ever a time you could buy.
It actually happened.
For a while. You could buy a Tesla with Bitcoin. I don't think you can even do that now.
No. He said it was too dangerous to the environment or something like that.
Yeah, which, politics. But at the end of the day, I know that you can go to Starbucks and, well, in some places, and buy coffee with Bitcoin. Okay, that's great. You bought your $7 coffee. The transaction fee
probably cost you $25.
I don't even know if maybe it's like even on the low end, say it's $3. You're still okay. You're paying 50% more for your coffee, and then I don't know. It's a novelty right now.
Right.
There's not real use case. So part of trying to figure out, like, say you find 20 of these things that you like, right? You've done the homework. Like, how do you narrow it down? Like, do you invest on all 20? Well, you could just do an even distribution.
I mean, if you just went to Coinbase.com and you said, this is my only universe.
Mm-hmm.
So that's going to narrow out a lot of crap, right?
There's 200-300 things there. Yeah.
Oh, really? Already?
Yeah. There's the meme coins. There's obviously Bitcoin, Ethereum. There's a lot of the major L1s, like,
okay.
But it's interesting as it became more obvious, and Coinbase hasn't said this. This is my perception. As it became more obvious that Trump was winning the election on election night, from then till now, Coinbase has listed other tokens that I believe probably wouldn't have made the cut underneath the previous administration. They look a little more memey. They look a little bit more, Coinbase is trying to take advantage of the current moment. Something's hot. They're all about trading fees, right?
Right.
You know what? I believe that universe should exist. And if they want to have that as part of their platform, so be it.
So in the Coinbase platform, if we narrowed it down and we said these coins are not memes and they have some utility to them, which ones would they be?
I hesitate to give, maybe I'll give the parameters on how I go about looking at them instead of giving advice on which ones to buy. So for me, it's like, what problem is the project solving? Is it something that I understand? That's a bit of a Warren Buffett way of going about it, right? Like,
and if I remember correctly, you can click on the coin in Coinbase and it tells you there's a description.
There's a description.
So you should be able to figure out if it's useful or not.
That to me, that would be the beginning of the homework on that one. There's other websites you can go to, like coinmarketcap.com or coingecko.com, punch in the ticker, and you would get more information. You also probably get links, if Coinbase doesn't have them, out to the project's website. And so it allows you to kind of be more informed than just the 100 words that Coinbase may give you in front of you. And, the other thing in crypto that could be a little tricky is sometimes you may look at trading volumes, and Coinbase will say, oh, over the last 24 hours or week or whatever, this has been a 60% or 70% of people have been buying this. Okay, that's fine. that doesn't mean that it can't be manipulated, right? That there could be outside people coming in wanting to pump that one up. So you have to be cautious with the signals that you see if you're using that signal. I personally don't use that one, but if you do, I've heard people get caught up in that. So the next level is the team that's building and trying to develop that project. Do they have experience in that market? That's something that I care a lot about. Like, it's not just a guy running around with a hammer looking for a nail.
Right.
You see a lot of crypto projects like that eventually, when they first launch, they make the founders rich at some level, and the public basically is the exit liquidity for them, and then it just goes off in oblivion and becomes one of the 30 million.
That's almost like a pump and dump kind of a thing.
Yeah, it's a more sophisticated pump and dump that maybe run longer,
Right.
but it's it probably wouldn't make it to the Coinbase platform, but that's not to say that you couldn't find it elsewhere if you really ended up down a rabbit hole. And just this kind of gets a little bit far in the weeds, and maybe we could do a whole podcast about tokenomics. But how is the token pool, or the float, if you want to use a stock term, how is it structured? Because some tokens have a fixed number, never going to be greater than that number. Like XRP has 100 billion. Bitcoin's another example, never going to have more than 21 million after they're all mined in that case. In the XRP case, they're all already out there in the wild. So who has them? Is it heavily weighted towards the founders? Are there lockups? Is there a set period of time that those tokens become available? Because all those things really come into affecting the liquidity and just where the price sits. Much like stock lockups for IPOs, that 60, 90, 365 day windows, it gets volatile because whether it's employees or whatever, they had shares they may want to sell. So the same thing happens in crypto. And just generally, like, I go back to all the time is, do I understand this? You don't need to understand the technicals of it. You don't understand how it's built per se, but like, do you understand the market, what they're trying to solve? And ideally, I like seeing teams that came from that industry, call it banking. They came in, they're like, you know what? Crypto can solve this problem that we've been seeing in this industry. They start the startup, the token network or whatever it may be. They go back to solve that problem. They understand the problem. They understand the customer, but they also probably have contacts in the industry to help grow that business, again, versus the crypto bro that's running around with his hammer trying to find a nail. Those are very different animals, very different levels of respect within the industry, and all those things.
So what do you think most crypto is trying to solve? Because the first thing that comes to my mind is cross-border transactions. But how many cryptos do you need for cross-border transactions?
Right. So that is one use case. I tend to spend my time thinking about cross-border payments, trade finance, which is incredibly unsexy. That industry largely still works off of paper, which is just mind-blowing in 2025. So the idea that I think the countries that still work off of paper and the small manufacturers that are trying to sell into like a G7 country like America or whatever, they're going to see the biggest leap. They're going to go from paper into technology and at the same time get immediate financing, because the crypto brings the financing piece. That's a challenge for the mom and pop manufacturer in Vietnam, for instance. They would have to have a local bank relationship versus now they could just need internet and they could potentially get access to.
So the financing would come through like a stable coin type?
Stable coin or even crypto token. One or the other. And the cool thing is then you mix in smart contracts and like it verifies things happen before they get their money. Like you can set these things up to be rather sophisticated. So cross-border payments, trade finance, supply chain management, which kind of bleeds in on that, but just kind of the tracking of goods and proving provenance. Supply chain management also mixes in like the proof of ownership in the sense that you can prove something's real. So is my Gucci handbag counterfeit or is it a real one? Gucci and some other of those high-end brands obviously have incentive to make sure there's not counterfeits or to help fight it. And they've even put like NFC tags on the bags that will go back to blockchain to prove that this bag was made in this factory in this date. So you know the history of it. Again, that's so they can continue to sell you a $5,000 handbag.
Right. It's kind of like the Cabbage Patch Kids up in Cleveland, Georgia. You know, they each came with their own little story, how they were born.
Yes.
They're just ahead of their time.
Way ahead of their time. They even beat the internet.
Right.
That's funny. And the last one is tokenization. And tokenization is a very broad topic. And I think that this actually is probably more applicable to the average listener that may be in an industry here in the US, business owner, and they want to understand how crypto is going to affect it. So if you're selling goods and you want to represent that value in a blockchain for whatever reason to, again, it may bleed over into supply chain management, but like, so you can track things or whatever. The idea that you put on a blockchain, the amount of things that will be on a blockchain 10 years from now is going to blow people's mind. Simple things that are the examples that come to mind will probably take the longest, oddly enough, is like a car title, a house deed, the stuff that government runs the registries of.
Right.
That's happening. But literally on the way to record this podcast this morning, I was listening to a panel. So the DTCC, it's an acronym that you recognize, right, that very few people probably do. They basically are the agency of record for the U.S. Equities and bond market, like who owns what as part of those transactions. They are a consortium that's owned by the different banks, but they said in short order, which my guess in their opinion is probably 3+ years, but in short order, they plan to bring $10 trillion of U.S. assets on chain tokenized.
Oh, wow.
Oh my gosh. So what does that do? Well, you also have a market or a world where I have a tokenized personal investment fund that I'm part of. Right now, that's just an asset that I get to hold and doesn't, outside of potentially any sales, I don't get to benefit from that. You have a world where if you want to take a loan against that, there's a market that could be easily created or somewhat easily created probably.
Right.
So in the examples are fresh and new, but they also, I think we're still experimenting. We don't fully understand how this will change it, but it's coming, and it's coming in a major way, which I think is the point there. So
in your fund, you're mostly investing in these crypto coins that are not in the US. Is that right? Could you explain the manufacturer?
Yes. So the idea of borders, I used to care more about. I care less about it now that the US is starting to get its act together. When the U.S. was cranky the last 4 years around crypto, I liked the ones they tend to perform better that were in Asia or the Middle East or whatever,
right,
doing different things. But slowly, borders are going away in crypto, which I think is a great thing, because then that will really allow the technology to kind of grow and flourish.
So we're looking for crypto that has utility. Can be used for something,
or the signs of budding utility. I think it's somewhat early on some of these to say that there is utility, but there's promise, good promise.
But something's in the works already.
Correct.
Not that we have an idea.
Right. You may see them doing proof of concepts or different places with different, whether it's government agencies, or you might see like the big consulting agencies around the world, the big four, doing projects into different businesses and different places. So, and the more times that happens, the more breadcrumbs I like to see, which helps me kind of build my theory.
Do the cryptos have their own website? You can go and read about them?
Most of them do. I would say all the ones that you want to care about do.
Yeah.
If there's no website, big caution there.
Right.
But I think generally it's the websites, but it's also like, I often get asked by potential investors, like, how do you know this was a good one? Well, I don't know. We'll find out together. But my thesis is this one is good. And part of it is I may have seen, I don't know, a dozen or 5 dozen videos with different people from this business/crypto network that are on panels with central bankers if they're talking about payments, or if they're at conferences, and all of a sudden you start to see this confluence of breadcrumbs come together. You're like, okay, fine, who cares? Maybe even a dozen, no one cares. But when you start to see a long trail and it become more serious people on stage with the crypto network, you're like, okay, they're adding some stamp of approval. They're not verbally saying that, but like you're not going to find a central banker on a stage with a crypto network.
Right.
If they're fully against it, like they're just not going to accept that gig. So
let's contrast that with
meme coins.
Meme coins. Yeah.
So we kind of hinted at it in the beginning. There's different buckets in crypto. Meme coins is a bucket that I do not play in at all. I'll say up front. I used to think it was a big distraction for crypto. I think it's a mild distraction. I've kind of walked back a little bit there. But meme coins is nothing but consumers gambling in crypto is the way that I've come to define it. But
So it's like going to Vegas.
yeah. But interestingly enough, to kind of use some technology terms, it's like going to Vegas, but buying an option on your blackjack hand,
Right.
that is long dated.
Right.
So the crypto, it could go down, it could go up. It's not like an immediate loss. Sometimes it
Right.
is, but generally not. So it's just kind of this weird mix of things. Meme coins are this interesting intersection of finance. I use that very loosely, or money, with pop culture. And if you want to bet on pop culture, meme coins are your way to do it these days, which is interesting.
Yeah.
And if we rewind, you could buy a baseball card. That was a bit of like pop culture. Or if you wanted to be, I don't know, in the late 90s, you're part of the grunge movement. Like there was no real way to own that besides just buying a t-shirt, right? Or
Right.
buying the CD. Now you can buy into what would be the more of the ownership side of it, which is interesting. And, you know, I meme coins really took off in the summer of 2021, in 2021 when everyone was locked at home, getting checks from the government and had nothing else better to do. And that was definitely a meme coin moment. And Elon was on Saturday Night Live. So,
but I just go back to there's no general purpose for these.
The purpose is gambling. I think that if you found somebody that was really into meme coins, they were being forthright and honest about it, they would say, yes, this is gambling, and own it. Right. Like, there's nothing wrong legally with it per se.
Sure.
But it's just like, if that's something you want to do, then great.
And then I go back to kind of a third stool, a leg of the stool, I guess, would be in my space, the wealth management space. And, there's really only two ETFs. Two types of ETFs. You can buy Ethereum, you can buy Bitcoin right now. You said in the last podcast, there's 70 applications right now.
Approaching 80 at this point. Yeah.
So 80 applications for more offerings. Yeah. Would I prefer to have is a market cap based one?
There is one.
I can pick one.
Yeah. and never have to think about it again.
Never have to think about it again. It just sorts itself out, kind of like the S&P 500.
Yeah.
But right now we use Bitcoin and we use Ethereum. Very little bit of Ethereum, but mostly Bitcoin.
Mm-hmm.
It's done well
in the because you guys were last summer, so you're approaching your year mark. I think.
Yes, right? Exactly. We didn't buy it the day of, but within a few months of the launch, we added it. And how we did it was we added to portfolios that clients opted into.
Right.
So it wasn't just an automatic ad.
Smart way to do it.
Some people are very passionate that this is all a fraud.
Right.
And then some people are very passionate that this is the future.
Mm-hmm.
I believe this is the future. And we use a small percentage that if it goes to zero for some reason, then nobody's going to be harmed. But if it goes to where everyone says it could go,
you'll be glad you did it.
You'll be glad that we did it. And I'll say that. Did you see Jim Cramer yesterday?
I try not to.
Oh my gosh. I tried not to see Jim Cramer too, but he was like in 10 years, so he said in 5 years, Bitcoin would be closer to 5,000 than 500,000.
So, right. So the inverse Kramer, which that's what people pay attention.
Exactly.
That was a great statement.
Yes.
So he is quite the knack for marking tops and bottoms.
Yes. So yeah, there is an inverse index that anything that Jim Cramer says you should buy, you do the opposite, and it is outperforming Jim himself right now.
Yes. By a large margin.
Yes. Not as well as the Nancy Pelosi index.
Right.
No one beats that one.
Correct. And that's pure insider trading.
Right.
I'll say it.
Yes. That one sends you to jail normally, unless you're in Congress.
Yes. Right. Yep.
But yeah, so it's financial advisory firms are not widely adopting crypto right now.
And it could be a couple of reasons. It could be that it's not easy, even though the ETFs are there. They don't, and I guess the second reason is they don't you can't really be diversified. Like it's a challenge, right? You can be part of two, and that's a diversification.
Right. From the rest of the portfolio.
From the rest of the portfolio. But within crypto, it's tough in what the SEC is allowed at this point. So I don't know if
I think for crypto. So in my space right now, we're dominated by private equity and private credit offerings.
Yep.
And most of them are crap.
Mm-hmm.
Goldman Sachs has a couple of good options. Outside of that, haven't seen a whole lot that unless you're a billionaire and have access to
different access
to
to
people
right.
that I can think of for everyone else. It just doesn't make sense.
Mm-hmm.
So I feel like they're so focused on that. There's no, in an independent firm, there shouldn't be any kickbacks for pushing that.
Mm-hmm.
But it makes you sound more sophisticated. They say, oh, I can get you a private credit fund. Oh, I can get you
the word private in general.
this private equity fund that's only available to.
Mm-hmm.
And if you say to someone, we're going to put part of your money in crypto, now all of a sudden you just sound like a sleazy scam artist guy, you know? So I think there's a little bit of that to it.
Mm-hmm.
Rick Elman's doing a good job of in his conferences, getting out there and talking to people and say, hey, you should be doing this.
Mm-hmm.
Advisors are also very slow to adopt new things. In 2004, when ETFs became prominent,
you were the crazy guy.
I was the crazy guy. I said, this is the future. We're going to ETFs. No more ridiculous tax bills.
Mm-hmm.
Like this is the future. Now I adopted it. And I used to get blasted whenever I did articles for ETF.com, or it was called Inside ETFs back then. But we get blasted because you're like, these are derivatives. You don't really own anything. It's like, you guys have no idea what you're talking about. You're angry about literally nothing.
Right.
So there's some of that with crypto. I would say that we're still adopting portfolios. More people every week opt into the crypto model. But initially it was almost everyone under the age of 30 and almost everyone with a net worth over 2 million.
Right. You know, and on the topic of private real quick, you know, you have to be an accredited investor a lot of times, right? Part of this new SEC, they want to revisit the what that rule looks like, what the standards are, all that stuff. And I think that if done smartly, that the threshold should be lowered because there's plenty of smart people out there that can do homework that don't have $1 million liquid, right?
Yeah. Right.
And it is a bit discriminatory in that sense. But also I can see the flip side where, you know, people would truly just be gambling because they like chasing stuff that they don't understand. So
yeah,
get taken advantage of.
The reason why I think that rule exists is to protect the investor from the advisor.
Right. And those thresholds have been adjusted one time, but they have not been inflation adjusted.
No.
So
That's
like
true.
they don't make sense anymore.
Yeah.
Right. So you know,
I have a $5 million minimum.
Yeah.
So you have to have $5 million of this firm if we're going to talk about private anything.
And you know, part of that's the logistics of dealing with just having the conversation. In the follow up, but. Totally
you're talking about locking up your money for a really long time,
right? I mean, it's a set 5 to 10 year bet a lot of times. Absolutely.
Where in crypto on the crypto portfolio, you should think of that in your head. This is here for 10 years. I don't want to touch it, but you can be in and out in a couple of milliseconds if you wanted to be.
Yeah, and you know, it's an interesting crossroads because I talk to my investors or potential investors is like, we are a firm that uses like a PE style diligence process, super in depth before we decide to invest in something. But we're married with the active liquidity of a token. Like I could decide to sell tomorrow and get out of it. I'm not married to a bad bet for the next 3 or 5 years.
Right.
So it's an interesting crossroad.
Like investing in a business, right?
Correct. Absolutely. Yeah.
All right, Robert, thanks for the insight and the updates. If you want to hear more on cryptos, episode 281, Tariffs, Ripple's Victory, What's Next for Investors, episode 275, we talk about the U.S. Bitcoin Reserve, SPF's president interview. Haven't heard from him in a while.
He got moved. He's no longer in Manhattan. He's, I think, in Kansas somewhere. And not that Manhattan was a great situation, but I'd imagine it did not improve.
Right.
I guess. So, yeah, he definitely got himself in hot water.
He gave to the wrong party. You know, if he'd given to the other party, maybe he'd be out of jail by now.
Politics.
Anyway, thanks for listening. If you want to learn more about crypto or Teton Crypto Capital, you can reach out to Robert in our show notes below. Thanks for listening. We'll see you guys on the next episode.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk. and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.